Hello and welcome to this next presentation here at ABG Investor Days. My name is Simon Granat and I work as an equity analyst at ABG covering IT and tech stocks. And with us today we have the pleasure of welcoming Christian Sundin, who is the CEO of Formpipe. We will for the coming 20 minutes Christian will present the company, and afterwards we will have a smaller Q&A session. And with that said, Christian, please go ahead and present the company.
Thank you, Simon. As Simon said, I am Christian Sundin, CEO of Formpipe. I've heard that most of you are quite familiar with Formpipe. So if the focus is to introvert or if there are any one of you out there who is not that familiar with Formpipe, please reach out afterwards or at any other time, and I will give you a separate session on getting to know Formpipe. But this presentation will be focused a lot on describing the results of 2020 and our future change of strategy and our financial goals. Can you please, I don't think I can alter slides, can I? So, okay. As I said, very short, 1 or 2 slides on Formpipe at a glance, then the highlights of 2020, and then go in a little bit more in detail on the strategy we have just published or announced for growth. Please change slide again. So Formpipe, who are we? Yeah, we are a software company in the area of content services, formerly known as enterprise content management, but Gartner has renamed it. In short, we are bringing order in digital information and creating structures and efficiency in how organizations and companies are managing their digital information. So in very short, you can compare us with ERP systems, but for words instead of figures. We have our background in the public sector in Sweden and Denmark, driven by the regulatory requirements mainly, and how to make digital information made available to the citizens. But we also have approximately a third of our business to the private sector through an international partner network. We're about 245 employees today in Denmark, Sweden, UK, US, and Germany. And a lot of our product development is placed offshore in Ukraine, and about 50 more people there dedicated to us working for product development. Change slides. The turnover in 2020 was a little bit above 400 million Swedish, but the important thing to point out here is the recurring revenue, which stands for 254 million, which is more than 60% of our total revenue is recurring revenue. And we have an EBITDA margin of above 25%. We're listed on Nasdaq Stockholm under the abbreviation of FPIP and have a market cap of a little bit more than 1.5 billion Swedish today. Change slides. So 2020, a challenging year for many. I believe that we have adopted really well in Formpipe. We had the structures, the processes, and the routines and tools to swiftly change to remote working, not only for ourselves, but also to be able to support our customers in a secure way from a distance, working remotely. And that played out quite well for us. But we also sort of took a short pause when the COVID hit us, and looked to, okay, how will this affect us? But quite swiftly we realized that with the high portion of recurring revenue that we have and our strong solid finances, we, instead of hitting the brakes, realized that this might be a good time to really take one step back, but also position ourselves for growth going forward rather than await the pandemic to end. So we set up a new growth strategy and have adopted quite well to the changed circumstances in the world. Coming back to that growth strategy later. We have, as I said, taken one part of that is that we also acquired a company during 2020. We did that completely digitally, made due diligence and acquired a company, and also made all the integration, onboarding of new people. With our strong company culture and structures and processes in place, that could actually be done very efficiently from a distance. And I would say, looking in the rear view mirror and comparing this integration of EFS, a software company that formerly was a partner to us on our product Lasernet, the integration of that part and that company into Formpipe has actually been better than previous integrations when people has by plane or flying around the world or to driving to different cities and having meetings. It has actually been more equal and much faster and better in terms of that everyone is there digitally rather than people flying around and meeting in conference rooms. So it's actually proven to be very efficient to integrate a company in a digital world. I wouldn't be me unless I brought up that the improved revenue mix. We have for many years strived to increase the share of recurring revenue and has been and still are on a journey of transferring our business from having more consultancy and having more traditional license revenue and transforming that into have a higher degree of recurring revenue. And we've continued on that path also during 2020. Please change slide. So coming into on the quarter here, I think I need help to click a few times so we highlight all the bullets and all the circles in here. Stopping in 3 clicks. There, one step back, please. Actually one step more back, thanks. There. Here we can see yet again the recurring revenue that I just brought up, how we're growing that. We're growing SaaS on with 18% compared to Q4 2019. We've grown the recurring revenue with 14% in total, and we are on the quarter when we're closing the year, we are on a level of 65% of recurring revenue. And that, it is some acquired maintenance in it on 4 million from the EFS acquisition I just mentioned, but still strong growth of recurring revenue. Click a few times. For the same reason, the non-recurring revenue, the traditional license sales and deliveries, they are down in line with our strategy. Click. But summing up, we're sort of flat in revenues, but it's much stronger revenue mix now than only a year ago. Please change slide. However, gearing up, as I said, click a few times to get these up. Cost margin. We have recruited. We have seen that better possibilities in recruiting people in the situation with the pandemic, and we're gearing up to both have a broaden and better product portfolio, but also have better partner support in order to drive sales faster going forward. Please click. So we have quite much higher staff cost level now going into 2021 than a year ago. It is both from the acquisition, but also for recruiting people, both in the UK and US, in order to make sure that our partner network gets the support they need in order to get our software into every deal they do. Click. Leading up to in this investment period, the EBIT is down, both for the reason of transforming the business to more recurring revenue and bringing down the non-recurring revenue, but also due to the higher cost level. Change slide. And as I mentioned, we are on a journey transforming our business to software as a service or subscription. And going into 2017, that ARR number was on just about 10 million, and we're now entering in 2021 on 58 million. A little more than that. Please change slide. And actually, looking on the quarter and the year, it's actually even stronger than the first meets the eye. The strength in Swedish krona compared to other currencies has actually made us revalue the ARR coming into the quarter or coming into the year downwards, since 80% of our SaaS contracts are actually in foreign currency. So the quarter in itself was quite strong on the 4.4 million ACV, but then a little bit negatively affected by currency conversion rates. Please change the slide. So we still managed to get quite solid financial performance in a challenging year, even though we also sort of pushed the throttle a little bit in difficult times and increased cost. We're still ending the year on an EBIT better than last year. It's in the 13% EBIT margin. But that is not what I want mainly to highlight. It is the journey we've taken from quite low levels of EBIT a few years back, improving that at the same time that we're shifting from non-recurring revenue to recurring revenue, coming from levels of 140 to 253 million in recurring revenue. Being able to combine that with increasing the EBIT is a balance, because they are of course contradictory and working against each other, these two ambitions, and we've been able to succeed with both. Please change slide. And especially Lasernet, we see a strong positive trend for Lasernet. And we also see on Lasernet alone, the ARR going into the year on 56 million. So then some acquired maintenance on Lasernet, since that is a partner, we then get that into our growth recurring revenue. And then added on ACV of SaaS of 9.5 million, having an ARR on Lasernet alone on 75 million going into 2021. And with the acquisition, we have notably strengthened our position to increase the growth pace of Lasernet even further, and to support even more partners with that within that network. Change slide, please. So that leads me in to the new strategy for growth. Change slide. We see 2021 as the start, even though we pre-started a little bit in 2020, setting up for this growth journey. But we will be very much focusing on growth the coming years. As I pointed out a few slides ago, we have executed on the strategy of improving margins. That has been our main objective, combined with shifting the revenue model to recurring revenue. We've been successful in executing on that strategy. Now we're shifting focus to get faster growth and stronger growth on top line through growth of recurring revenue and SaaS, of course, but with investing in more capacity to drive this growth faster. We have a strong network of certified partners, and we have a high share of recurring revenue as a solid foundation. But and that growth will be coming from the growth of even more software as a service. And the growth journey will be organic to the most part, but we're not excluding the possibility of complementing our organic growth with some strategic acquisitions. Change slide, please. We have a loyal customer base, and this is the foundation for us being able to invest in further growth. And we've been growing quite strongly with the recurring revenue, as I've already pointed out on several slides now. So please change slide. The market is there. It is a predicted number from Gartner that it's a 10% growth on annual level on the content services market. But more importantly, the demand for SaaS is increasing, and it's forecasted that 60% of all software sales in 2024 will be software as a service. And with the offering we have on SaaS, and especially for Lasernet, that really helps us in this transformation and sets the possibility for us to really increase the growth rate that we've been on for a few years to grow faster. Change slide, please. We have two strong parts of Lasernet or Formpipe. We have the public sector, where we have a market leading position in both Denmark and Sweden. We have about 500 existing customers there. There's a strong drive in society right now in digital e-government to do co-creation of new solutions together with the current vendors, and to see what is the next phase of the digital society for e-government, for the citizens and so forth. And we are a trusted advisor in doing that. We will continue to drive that growth journey. We will see growth also in the public sector combined with good profitability. However, it will not be as strong growth in public sector as we see the potential as we have in private sector internationally with Lasernet. We have a strong partnership with Microsoft, where we are complementing Microsoft Dynamics 365 with Lasernet in Azure in a very good way. And Microsoft is gaining a lot of market share in the ERP space in the cloud. We are piggybacking on that success actually, and we will tag along on that growth journey that Microsoft have with Dynamics. And sort of the same thing applies for Temenos. Temenos is a partner within that, or a supplier of software for the bank and finance industry. We have, with the acquisition of EFS last summer, we have come even closer to that partnership. And also Temenos is gaining market share and sees as an upcoming player to the bank and finance industry in Europe, but also with a strong ambition to grow faster in the US. And we will tag along on both of these two growth journeys and focus on those to be the complementing software on all Microsoft Dynamics deals with our partners and all Temenos deals with our partners in that partner network. So we will invest in resources to support and grow that partner network and give our partners success in their implementation projects of Dynamics and Temenos. Change slide, please. We have, but we have not been as transparent with that, but the Lasernet business has been growing quite substantially for a number of years now. We have had more than 12% growth per year in Lasernet since 2016. And that is, as I pointed out, a lot helped by Microsoft and the success of Microsoft Dynamics 365, where we have been part of a lot of the implementations of Dynamics 365 with Lasernet. And we now see a strengthened position on that, as I said, with the acquisition of EFS, to do the same thing with Temenos. And we will, as pointed out, invest in making sure that we have the capacity to make life easy for our partners out there that is implementing Temenos and Microsoft. Change slide, please. A short for you who doesn't know Formpipe that well and our product portfolio, what is Lasernet? Yep, Lasernet is an add-on software for ERP systems, such as Microsoft Dynamics or SAP or BON or Oracle or whatever, but we are really strong on Microsoft Dynamics. We're helping Dynamics to be better in producing business documents, storing business documents, and making sure that they are distributed in the right layout, format, and whatever digital format the end customer want to receive it in, and so forth. We have already more than 2,000 customers worldwide, and together with Autoform DM, which was the software that was built by EFS, the company we bought last summer, we make the Lasernet offering even stronger, because Lasernet together with Autoform DM has been the success story at Temenos, and that's why we also get even closer to the partner Temenos. So we get the two complement softwares to both of these platforms now. And the global ERP market is also expected to grow quite significantly. It's an even bigger market on the world market than content services, but it's similar growth rates of approximately 10%. And again, more importantly, the same transformation to more and more SaaS is happening in the ERP market space as well. Thanks for that slide. Next slide, please. 2021 will be a year of investment. We are growing capacity, mainly through recruitments, in order to support our partners better. It will have a negative impact on EBIT margins in 2021. And combined with this growth journey internationally, we will continue to have also growth focus on as well in the private sector as well as in the public sectors. Change slide. So when we announced this new growth strategy, we also said, okay, what will this mean to our owners and the company and the KPIs that we are going to produce going forward? Yeah, we will grow with 10% on an average annual growth from 2021 to 2025. In 2025, we will have increased the share of recurring revenue even further. So we will have 70% of our revenue in 2025 will be recurring revenue. We will take a hit on EBIT in 2021, but we will, as we've done before, execute on the strategy and getting the scalability of growing recurring revenue to bring us back to even better margins that we are on today. And by 2025, we will have an EBIT margin about 20%. And over time, we will continue, since the scalability and the cash flow from recurring revenue and how that is, it's actually a negative capital employed, so to say, since it's a lot of it's paid in advance. We will still have a strong cash flow in our business, meaning it's very possible for us to have a dividend policy of paying out more than 50% of our net profit over time. Change slide, please. So in summary, we have a strong track record in executing on the strategy of growth of recurring revenue, combining that with increased profitability. We already have a very strong and balanced customer base with a lot of recurring revenue. We are the market leader within content services within public sector Sweden and Denmark. We have the relationship with Microsoft, very strong, and now added it with Temenos. So those two focus areas will make it possible for us to execute on also these targets and this strategy. It will hurt our margins in 2021, but we will go for this significant expansion potential that we'll see in Lasernet and the rapid conversion towards SaaS, both in the private and in the public sector. Change slide, please. And I think that was all from me. I hope I've been able to keep the time decent anyway. Sorry for running over with a few minutes. Thanks.
No worries. Thank you, Christian. Unfortunately, we only have time for 1 minute or so in terms of Q&A, but I'd like to ask you, because I must say that I like your forward-leading strategy going forward, but what is it that makes you execute on this strategy right now? Has there been a change in the market dynamics, or why is it so interesting to go for an aggressive growth strategy within private as it is today?
Yeah, we see the opportunity, of course, and there's as I tried to point out, the market demand is there. But also, I think we are, as a company, ready. We've been through a transformation of making sure that we have the structures, the processes, the tools, and the organization in place to really go shifting focus from being a conglomerate, so to say, of a lot of small units within Formpipe. We made one company of it with the two pillars of public sector and private sector, and we have all the possibilities to go for the growth. And yeah, I wouldn't say that we're exploring the pandemic situation, but we see it as might be easier to actually attract and find the right talent in an uncertain world. And we are a safe haven with strong finances and the possibility to go for more recruitments at this time. And yeah, that's why we see an opportunity here.
Thank you. It looks very bright for the future, and it will be, of course, very interesting to follow. I'd like to send you a big thank you also for attending at today's session. Unfortunately, we run out of time, but with that said, thank you, Christian.
Sorry about that. And please, everyone that want follow-up questions, reach out to me, and I will do my best.
Thank you.
Thanks, Simon. Thank you, ABG.